Before we start this video, do like and subscribe to our channel and not miss on any updates.
Let's now start the next chapter, that is corporate social responsibility. Now, corporate social responsibility, which is covered under section 135 of the Companies Act, you would have already learned and a lot of you would have already forgotten also, right? So, not to worry, we'll start from the basics and we'll try to understand what are the requirements of the act, how do we calculate the net profit, the average net profit and all related aspects. But before that, let us have a broad idea of why corporate social responsibility is given as a part of the statute, is given as a part of the act, and it has been made mandatory for certain specified companies to spend some amount towards social responsibility. Now, to begin with, companies, they use a lot of resources from the society, from the community, and they make profits. And as a responsible corporate citizen, the government feels that the companies must also do something to the society, for the society, must give something back to the society. Of course, there are employment opportunities given. Of course, corporates help in growth of the economy. But apart from that, there must be some direct benefit which the company must provide to the society. And there is a lot of focus around the area, the local area where the particular company operates. Now, one may think that providing facilities to common citizens is the responsibility of the government, right? That is the government's responsibility. Government has to provide infrastructure, education, health and all of that. But in a country like ours, which is huge, which has 140 plus crores population, the government wants to shift a part of its burden or responsibility to the corporates. Now, if you look at the history of some of the larger corporates, you would see that even without the existence of section 135 of the Companies Act, which came in 2013, even before that, the companies were spending money for social purpose, they were spending money for charitable purpose, they were doing something for the benefit of the society at large. You could look at the foundations which are created by companies like Tata, Reliance, Birla, right? They have established schools, hospitals where they have set up their factories. If you look at the Tata Memorial Hospital, which deals with cancer patient in Mumbai, one of the largest facility for cancer treatment and research, right? Similarly, you have a lot of hospitals created, they sponsor a lot of education. When there was pandemic, a lot of companies came forward, and when the COVID pandemic hit, a lot of companies came forward and they contributed in different ways, providing oxygen cylinders, donating to the various funds, state fund, national fund, whatever it is. Companies do it, companies have been doing it. Now, this has been included as a part of an act to formalize it and to ensure that more and more companies, as they grow, they do something for the society. They give something back to the society. Now, enough of this gyan. Let us move on to the topic. Let us move on to section 135 that deals with corporate social responsibility. If you look at the name, it is the responsibility of a company towards the society. Corporate social responsibility is responsibility of a company towards society. Now, this concept ensures that the company not only looks at its profit, not only looks at its bottom line in terms of financial profitability, it also looks at what it can give back to the society. Let's now have a look at section 135 of the Act, which talks about what are those companies which are required to comply with the CSR provisions, right? Now, as per section 135, every company means all the companies which meet the definition of companies given in section 2, those are covered in this section provided they fulfill certain criteria. So, your private companies, your public companies, even if it's a section 8 company, it's a company, right? If it's a one-person company, even then it's a company, but then it has to meet the financial threshold criteria. So, all the companies under the Companies Act having, now what are the criteria? Net worth of rupees 500 crore or more. So, the net worth has to be 500 crore or more, or turnover of rupees 1000 crore or more, or a net profit of rupees 5 crore or more during the immediately preceding financial year. So, there are three criteria. What are the three criteria? So, first criteria is net worth of what? Of 500 crore or more. Then, second criteria is turnover. Turnover of rupees 1000 crore or more. Third criteria is net profit. Net profit of rupees 5 crore or more during the immediately preceding financial year. So, you check net worth of 500 crore, turnover of 1000 crore, net profit of 5 crore or more. So, if any of these three criteria are met during the immediately preceding financial year, they shall constitute a corporate social responsibility CSR committee of the board constituting of 3 or more directors, out of which at least one director shall be an independent director. So, the first subsection says that if there is a company which has net worth of 500 crore or more, turnover of 1000 crore or more, net profit of 5 crores or more, if any of these 3 conditions are satisfied, then it will constitute a CSR committee. It will constitute a CSR committee of the board. So, there is a board of directors. From the board of directors, you will pick few members, you will pick few directors and you will create a CSR committee. Now, what is the composition of CSR committee? Should have 3 or more directors. So, at least 3 directors or more than 3 directors, out of which at least one director shall be an independent director, right? So, minimum 3 directors or more than 3 directors, out of which one director will be an independent director. Provided that where a company is not required to appoint an independent director under subsection 4 of section 149, it shall have in its CSR committee 2 or more directors. So, there are 2 scenarios. One, independent director is required to be appointed as per section 149, then you will have 3 or more directors, one of them have to be independent. So, meaning to say 2 regular directors which are executive directors plus 1 independent director. If you are not required to appoint an independent director, for example, it is a private company and not required to appoint independent director. Now, what are the minimum number of directors for a private company? Only 2. Now, if I am saying private company has 2 directors, how will I appoint 3 directors on the committee? So, there I can do with 2 directors only, where there is no requirement of independent director, right. So, if the company is not required to appoint an independent director under subsection 4 of section 149, it shall have on its committee 2 or more directors. If it is required to appoint independent directors, then 3 or more directors. Criteria: net worth 500 crores, turnover 1000 crores, net profit 5 crores or more. This is what subsection 1 talks about. It says you have to form a CSR committee. You have to form a CSR committee. Now, that is first part of it. Second thing we need to understand is what is given in subsection 5. Okay, so this subsection 5 talks about how much amount should be spent. So, the board of every company referred to in subsection 1. So, the company which meets the criteria of subsection 1 and who has the responsibility? The board has the responsibility, shall ensure that the company spends in every financial year at least 2% of the average net profits of the company made during the 3 immediately preceding financial years, or where the company has not completed the period of 3 financial years since its incorporation during such immediately preceding financial years in pursuance of its CSR policy. Okay, so now what happens is the committee, CSR committee will form the policy and all of that would happen. The spending requirement is if I am a company where either my turnover is meeting the criteria which is 1000 crores, my net worth which is 500 crores or my net profit which is 5 crores, because of any of this reason I fulfill the criteria. Once I fulfill the criteria, I will form a committee, the committee will form CSR policy and all of that. How much amount should be spent? So, if I am in the current year, let us say I am in year 5, In year 5, I have to spend 2% of average net profits of preceding 3 years, that is year 2, year 3, year 4. Take the average of net profits. How to compute, we will come to it. Take the average of net profits. Out of the average of net profits, 2% should be spent in the current financial year, that is year 5. So, average of net profits of year 2, 3, 4, you have to spend in year 5. Now, for example, this company was formed in year 3. Then you have to spend the average of year 3 and year 4 in year 5. Provided in the preceding year, that is in year 4, you meet one of those 3 conditions. Sir, if you do not meet one of those 3 conditions in preceding year, then no need to spend. Sir, what if there is loss? If there is loss, the 2% of the average losses will also be loss and hence you don't need to spend, right? So, what you have to check is in the current year, you have to check whether in the preceding year the net worth, the profit or the turnover criteria is met or not. If it is met, then 2% of average of preceding 3 years net profit has to be spent. That is the requirement of subsection 5. Now, section 135 deals with corporate social responsibility and we also have a rule related to this section, which is Companies Corporate Social Responsibility Policy Rules of 2014. There have been a lot of amendment from time to time, so we will be looking at the latest one and see what are the various important aspects covered under these rules. Okay, so section 135 talks about the applicability, constitution of committee and how much amount to be spent and all of that. The other aspects like what is net profit, how the amount should be spent, and what should be done in case of excess spend, less spend, and all of that are covered by rules. And we'll now have a look at some important definitions given by Rule 2 of Companies CSR Policy Rules 2014. First definition is with respect to net profit. Net profit means the net profit of a company as per its financial statement prepared in accordance with applicable provisions of the Act. So, you have to prepare the financial statements as per the applicable provisions of the Act, and whatever is the net profit calculated as per the provisions of this Act. And you have section 198 that talks about how to compute net profit, and according to that we have to calculate the net profit, but we will not include the following. So, there are two items which will not be included. So, when you get the financial statements of a company which is prepared according to the provisions of the Act, two items will be excluded. Number one, any profit arising from any overseas branch or branches of the company, whether operated as a separate company or otherwise. So, this talks about a case. Say for example, we are Indigolearn. Indigolearn has a branch in, say for example, UK. Now, we have a branch in UK where we deliver, say for example, ACCA classes. Now, whatever profit is earned by that UK branch, that will be excluded from the net profit for the purpose of calculating net profit for this particular section. Okay. So, foreign branches income will be excluded. Now, that foreign branch may be a separate company like a subsidiary, or it may be just a branch, but in that case, whatever is the profit arising from any overseas branch or branches of the company, whether operated as a separate company or otherwise, will be excluded. And any dividend received from other companies in India which are covered under and complying with the provisions of section 135 of the Act, even that will be excluded. Say for example, we have Reliance Industries and Reliance Retail. Reliance Retail is covered under section 135, they have to comply with CSR provisions. So, they would comply with CSR provisions. Now, whatever is the profit earned, out of that profit, some amount would be paid as dividend to Reliance Industries, and Reliance Industries will take that as income in its profit. That will be used to calculate the net profit. So, here one company which has already spent on CSR, and out of whatever has been left, it is paying that dividend to another company. So, what the rule says, for Reliance Industries, you will not consider the dividend income which is paid by Reliance Retail, provided Reliance Retail is covered under section 135 and has to spend amounts on corporate social responsibility. So, these two items would be excluded. And also, in case of a foreign company which are covered under these rules, net profit means net profit of such company as per profit and loss account prepared in terms of clause A of subsection 1 of 381 read with section 198. So, you have to refer to section 381 and 198 to determine the profits for a foreign company, right, are not much relevant as far as our calculations and exams are concerned. But two things you have to remember: overseas branch profit and dividend from companies which are covered under section 135, those two will be excluded. So, we have understood the meaning of net profit. The next thing you have to understand is the meaning of net worth, and net worth is not defined under the rules. So, you have to refer to section 2 of the Companies Act where net worth is defined. What is net worth? Net worth means the aggregate value of, means the summation of the paid up share capital, whatever is the paid up share capital, you will take that. All reserves created out of profits like your retained earnings, general reserve, capital redemption reserve, all of that which are created out of profits. Then securities premium account. So, that is also considered whenever you issue shares at value greater than the face value. Then debit or credit balance of the P&L account. So, if there is a debit balance in the P&L account, you will reduce. If there is a credit balance in the P&L account, you will add. After deducting the aggregate value of accumulated losses, if there are any. So, if there is an accumulated losses, generally would be a debit balance in the P&L account, that will be reduced, and deferred expenditure and miscellaneous expenditure not written off. Now, generally these days in the balance sheet you will not get this, because deferred expenditure or miscellaneous expenditure not written off cannot be capitalized as a part of your intangible assets, right, as per the audited balance sheet. So, you have to look at the audited balance sheet and see paid up capital, securities premium, all reserves out of profit, debit or credit balance in the P&L. You will reduce all accumulated losses, you will reduce miscellaneous expenditure which have not been written off as per the audited balance sheet. So, all of these makes your net worth, but net worth does not include three things: reserves created out of revaluation of assets, your revaluation reserve which is captured in OCI, write back of depreciation if any amount has been written back. So, whatever depreciation has been charged, and if that has been written back and created a reserve out of it, that will not be considered, and any reserve arising out of amalgamation, like you have capital reserve arising out of amalgamation, that will not be considered, right. So, to determine the applicability, you have to consider net worth in this manner, right? Take all paid up capital, securities premium, revenue reserves, all the capital reserves, reduce the accumulated losses, write off any miscellaneous expenditure which has not been written off. You will not consider three reserves: revaluation reserve, write back of depreciation, and reserves created out of amalgamation. That gives you the net worth. Then another criteria is related to turnover. Turnover is basically the total revenue which has arisen from sale of goods, sale of services by an entity in the preceding financial year. Financial year means 1st of April till 31st of March. Now we have understood which companies have to create a CSR committee. We have also understood how the CSR committee is to be created, and we also understood the definition of net profit and net worth and also turnover. Now we'll have a look at the rules relating to the CSR committee. What is the committee and what is the responsibility of the committee? Please remember, the CSR committee is a committee which is created out of the board. Means there will be a board of directors. From that board of directors, you will create another committee which will be a CSR committee. So the CSR committee will always report to the board, right? Now let's have a look at rule 5 that deals with CSR committee. Sub-rule 1 says that a company covered under subsection 1 of section 135 which is not required to appoint an independent director pursuant to subsection 4 of section 149 shall have its CSR committee without such director. So for a company which is not required to appoint independent director, you will have a CSR committee without such director, and in this case we have also understood that it can form a CSR committee with 2 directors only, minimum 2 directors. Then a private company having only 2 directors on its board shall constitute its CSR committee with 2 such directors. So if there is a private company and to that private company CSR provisions are applicable and they have only 2 directors, then you will have a CSR committee only with those 2 directors, right? You cannot have 3 directors because there are only 2 directors on the board. With respect to a foreign company covered under these rules, the CSR committee shall comprise of at least 2 persons, of which 1 person shall be as specified under clause D of subsection 1 of section 380 of the Act, and another person shall be nominated by the foreign company. So this is about the foreign company. Now this person who is specified under clause D of subsection 1 of 380 is that person who is nominated, who is authorized to receive documents and all of that on behalf of the foreign company. Okay, so that and another person a foreign company will nominate. So you'll have 2 members here. You will have 2 members here, and in case of company which is not required to have independent directors, there also will have 2 members as per section 135, right? Now, what is the role of CSR committee? The CSR committee shall formulate and recommend to the board an annual action plan in pursuance of its CSR policy, which shall include the following. So the committee's role is to formulate a policy and recommend it to the board. What will the action plan contain? First, the list of CSR projects or programs that are approved to be undertaken in areas or subjects specified in Schedule 7 of the Act. So, Schedule 7 of the Act lists down what are the projects which can be undertaken, what are the activities which can be undertaken that will be considered as corporate social, that will be considered as CSR activities. See, the objective of CSR, as I told you, is to give something back to the society. So what kind of activities can be covered as a social responsibility, whether building of schools, whether building of hospitals, or whether building hospitals for employees, right? What all can be covered? That is listed in Schedule 7. So for list of activities, list of projects, list of programs, we have to refer to Schedule 7. Then the manner of execution. So first is, what are the projects or programs that we will do? Whether we will go and teach some students from financially weak backgrounds, or whether we will build a hospital, whatever we will do, that is a part of Schedule 7. And the manner of execution of such project or programs as specified in sub-rule 1 of Rule 4. So Rule 4 talks about how will those projects and programs be executed. So here the manner of execution, how will that be executed, that will be defined in this. Then modalities of utilization of funds and implementation schedules of the project or the program. So you have 2% of average of net profit. How will that amount be utilized? What will be the schedule of implementation? When will we spend? All of that will be included. And what is the monitoring and reporting mechanism for the project? So list down the projects and programs. See how that will be executed. How will we utilize the fund? How will we monitor and report? And details of need and impact assessment, if any, for the projects undertaken by the company. So there is also provision related to impact assessment. Whether the objective have been achieved or not, that impact has to be assessed, right? So here they will outline what are the details of need and impact assessment, if at all they are required, for the projects undertaken by the company. Then the board may alter such plan at any time during the financial year as per the recommendation of the CSR committee based on the reasonable justification to that aspect, right. So here the important thing is you need to have an annual action plan. What are the projects to be taken? What are the programs to be conducted? How will we implement, execute them? How will we utilize the funds? How will we report and monitor? Then impact and need assessment. How will we carry out that? All of that has to be defined as a part of the annual program or an annual action plan. So now we have understood what is the role of CSR committee. Now we will understand what is the role of board in this overall CSR framework, right. Now to quickly recap, any company which meets the specified criteria is covered by CSR provisions. Now first thing what they have to do is they have to compose a CSR committee which is a subcommittee of the board, right. Now the CSR committee will prepare an annual action plan and all of that and will submit to the board. Now it is up to the board to ensure that the CSR provisions are complied with, that the company spends the required amount, right. All of that is the responsibility of the board. So what is the responsibility of the board? The first is to disclose the composition of the CSR committee in its report. So whatever report the board prepares, that report must contain the composition of the CSR committee. Who comprises the CSR committee? That's the first thing. Second, approve the recommended CSR policy for the company. So whatever is the CSR policy that is recommended by the CSR committee, they have to approve that. Then disclose the content of such policy in its report and place on the company's website. So whatever is the policy, that has to be disclosed in the report, and also they have to place it on the company's website. Then they have to ensure that the activities included in CSR policy of the company are duly executed by the company. Whatever are the activities that are covered by the CSR policy, they must be executed, and they have to ensure that this company spends in every financial year at least 2% of the average net profits of the company made during the 3 or less number of years. If it is less than 3-year-old company, then with the lesser number of years immediately preceding financial year. So average net profits, 2% of that has to be spent, and whose responsibility is it? It is the board's responsibility. And there are disclosure formats in which the board of directors have to disclose the CSR amount which has been spent as a part of their board report. Now we have understood the criteria, what the committee has to do, what the board has to do. Let us take one example with few numbers and see how does it actually work. So say we are talking about 3 years, okay, profit for the year. Profit for the year, let's say we are talking about year 5, year 4, year 3, year 2 and year 1. So year 1 is not relevant because we just need to look at the 3 previous year, right, or I will write amount in crores only. Say profit for year 5 is 3 crores, profit for year 4 is 6 crores, year 3 was 2 crores and year 2 is 1 crore, right. Now to decide whether the CSR provisions are applicable or not, you have to look at year 4. In the current year, the profit may be less than 5 crores, but even then it will be applicable based on the condition of year 4 where it is greater than 5 crores or more, right. So if it is 6 crores, it is applicable. Now if it is applicable, what you need to do is you have to calculate average profits for preceding 3 years. Now what is the average profit? 6 plus 2 plus 1, 9, and 9 divided by 3, you get 9 divided by 3, you get 3 crores, right. This is the average profit. 2% of average profit, 3 multiplied by 2%, which is 6 lakhs. So 6 lakhs has to be spent in year 5 towards CSR activities, towards activities of corporate social responsibilities. Sir, what kind of activities are these? These activities are specified in Schedule 7. These activities are specified in Schedule 7. We will have a look at it. Now, two things are possible. One, I am spending for, let's say, elevation of poverty. I am spending for some kind of healthcare. All of that is spent. Sometimes it may be possible that the company wants to have a project, let's say a hospital project. The company starts a hospital project. It wants to build a hospital. Now, tell me, Now, so far we have understood to which companies is this CSR provision applicable, the CSR committee, the CSR board, and within what time you have to spend, otherwise where you need to deposit, and all of that. Now, we'll look at few important points which have been clarified through various notifications and FAQs, and also they are a part of the rules, etc., which are relevant for our understanding. And then we will see what are the activities which can be considered as CSR activities, right? So first let's look at some important points related to CSR provisions. First one is, the CSR activities shall be undertaken by the company as per its stated CSR policy as projects or programs or activities. Now, there are three things here. One, the CSR activity which is undertaken by the company, it has to be as per its CSR policy, and it can be a project, maybe a building, let's say maybe construction of a hospital, it's a building, okay, or a program, they run some education program, or some activities, one-time activity kind of thing, right? So, it can be any of these three, and the board may decide to undertake its CSR activities through either a company established under section 8 of the Act, or a registered trust or a registered society established by the company either singly or along with any other company. So, the company, to implement its CSR activities, to carry out the CSR activities, it can create a separate section 8 company or a trust or a registered society either on its own, that is alone, or by coming together with another company. Say for example, there are two companies in a given locality. Now, if each one of them form their own section 8 company, you have to spend more on overheads, you have to spend more time on management, you have to engage more employees. Rather than that, what they can do is, they can come together and create their own section 8 company, and that section 8 company will implement the CSR activities. Or through a company established under section 8 of the Act, or a registered trust or a registered society established by the central government, state government, or any entity established under an Act of Parliament or a state legislative. So, the summary of this is, it can be a company under section 8, it can be a trust, registered trust, it can be a registered society. These can be either formed by the company alone or with another company together, or these have been established by the central government or the state government or any act of the central government or the state legislative. So, the company can implement its CSR activities through any of these three entities: section 8 company, registered trust, registered society, which is either established by itself along with somebody else, or it is established by the central government, state government, or an act of parliament or the state legislature. Then, a company may also collaborate with other companies for undertaking projects or programs or CSR activities in such a manner that the CSR committees of the respective companies are in a position to report separately on such project programs in accordance with this rule. So, you can also collaborate. See, it is not necessary to have a company. What it says, the board may decide to undertake it through these kind of companies. Otherwise, what can they do is, they can collaborate with some other company. That companies may be spending on some CSR activities. You also join hands with them and you implement the CSR activities. Now, these kind of collaboration could be seen, especially in case of things like, earthquake, tsunami, floods and all of that, where a single company may not be able to do. So, 2-3 companies may come together and do the activities related to CSR activities. But then, you must be able to report your activities separately as per the CSR policy. Then a very important point, the CSR projects or programs or activities undertaken in India only shall amount to CSR expenditure. So, if you have to carry out CSR activities, if you have to spend with respect to CSR provisions, the spend must be in India only. You cannot say, okay, we have provided flood relief to Bangladesh, or we have provided earthquake relief to Nepal, or we have provided earthquake relief to Turkey. Those are not covered under CSR activities. We are not saying those are not allowed. You go and spend, you go and do your global charity. But for the 2% of average net profit criteria, it has to be done in India only, right? Then, the CSR projects or program or activities that benefit only the employees of the company and their families shall not be considered as CSR activities in accordance with section 135 of the Act. Now, what does this mean? Say for example, we are talking about ITC Limited. They have a paper plant in a particular town called Bhadrachalam and they have set up a factory there. Now, in that factory, thousands of workers work there. Now those workers have their families also. Now because it is a rural location, it doesn't have great educational facility, what the company thinks is, let me create a school only for my employees and their families. Means basically the kids of the employees can take education in that particular school. It is provided free of cost. It is provided free of cost to the employees and their family members. That school provides educational services for their employees and their families only. Now, the spending done on the school for providing this free education is not called a CSR activity. Or let's say there is a hospital, that hospital is accessed only by employee and their families free of cost. That expenditure is also not qualified for CSR expenditure. And the companies may build CSR capacities of their own personnel as well as those of their implementing agencies through institutions with established track records of at least 3 financial years, but such expenditure shall not exceed 5% of the total CSR expenditure of the company in one financial year. Now, what does this mean? This basically means I can use my own employees for the purpose of CSR activities, or I can use the personnel of some implementing agencies. Now, when I am using the services of an implementing agency, let us say I approach an agency. That agency carries out work related to CSR activities. So, I use their capacity, I use their personnel to implement my CSR activities. Now, that agency will not do the work for free. Now, such kind of agencies which have an established track record of 3 years, I can use their capacities, but then the spending I am doing for those agency or the amount that I am paying to those agency cannot exceed 5% of my CSR expenditure. So, if I am using agencies to implement the activities, the expenditure must be within 5% of the total CSR expenditure. Contribution of any amount directly or indirectly to any political party shall not be considered as a CSR activity. So, you cannot say that, okay, there is a political party, that political party is providing flood relief, I am contributing to the political party, that is not considered as CSR expenditure. Okay, so that will not be considered as corporate social responsibility expenditure. Whatever amount you have contributed or donated to the political party, you can claim your deductions under the income tax, but here it will not be considered as CSR expenditure. So, two important things. One, it has to be within India. 2, you cannot contribute to a political party, meaning to say, if you contribute to a political party, it will not be considered as an expenditure. And it can be done through a Section 8 company, registered trust or registered society, either formed by the company, jointly with another company, or by central government, state government or the respective acts. Right? These are the things that you have to keep in mind as far as the CSR activities are concerned. Now, what we will do is we will have a look at Schedule 7, which gives us the activities which can be considered as CSR activities. Now, what are they? First part is hunger, poverty, malnutrition, promoting healthcare including preventive healthcare and sanitation, including contribution to Swachh Bharat Kosh set up by the central government for the promotion of sanitation and providing safe drinking water. So, poverty, hunger eradication, malnutrition eradication, promoting healthcare, preventive healthcare, sanitation, contribution to Swachh Bharat Kosh, all of that is covered under CSR activities. Then promoting education, including special education and employment enhancing vocation skills, especially among children, women, elderly and the differently abled and livelihood enhancement project. So, first one talked about your poverty, hunger eradication, malnutrition eradication, sanitation, preventive healthcare, etc. Second one talks about education, including special education, especially for children, elderly and women, and also employability enhancement skills related projects if you are carrying out, that is also covered. Then promoting gender equality, empowering women, setting up homes and hostels for women and orphans, setting up old age homes, daycare centers and such other facilities for senior citizens, and measures for reducing inequalities faced by socially and economically backward groups. So, this covers what? Promoting gender equality. So, basically the company spends amount for promoting gender equality, maybe by way of promoting girls' education. Still, in large part of the country, girls' education is not considered seriously, right? The male child gets education opportunities, the girl child does not get equal opportunities. So, if you are doing something for that, that is also considered. Then, empowering women, right, giving them more employment opportunities, training related to that. Then, setting up homes and hostels for women, orphans and also the elderly. Then, providing daycare centers and all of those related matters is covered under CSR. Then, ensuring environmental sustainability. So, basically sustainable development, taking care of pollution, doing things like forestation and all of that. ecological balance, protection of flora and fauna, plants and animals, animal welfare, agroforestry, conservation of natural resources, maintaining quality of the soil, air and water, including contribution to Clean Ganga Fund set up by the central government, rejuvenation of river Ganga. So, activities which will promote ecological balance, which will help us in in having sustainable development, sustainable environment, preserving flora and fauna, all of that, including contribution to Clean Ganga Fund, right. Now, these are pointers which I don't want you to by heart, just have a broader understanding of what all are covered in CSR activities. Then, protection of national heritage. So, if there is some heritage which is of national importance, those protection of national heritage, maybe for example Taj Mahal, okay. Then art and culture, including building and sites of historical importance and works of art, setting up public libraries, promotion and development of traditional art and handicrafts. So, this talks about heritage, art, culture, how can you preserve them, right, that is what is covered here. Then measures for the benefit of armed forces, veterans, those who have retired, war widows and their dependents. So, if someone has lost their spouse maybe during war or while serving the army, those and their dependents, central armed police forces and central paramilitary forces, veterans and their dependent including widows. So, if you are doing some measures or if you are carrying out some measures for benefit of these, that is also covered under CSR. Training to promote rural sports, nationally recognized sports, Paralympic sports and Olympic sports. So, if you are doing that for promoting rural recognized sports and all of that, that is also covered. Then contribution to the Prime Minister's National Relief Fund or Prime Minister's Citizen Assistance and Relief in Emergency Situation PM CARES Fund or any other fund set up by the central government for socio-economic development, relief and welfare of the scheduled caste, tribes, other backward classes, minorities and women. You are contributing to some specified funds, that is also considered. Then contribution to incubators or research and development projects in the field of science, technology, engineering and medicine funded by central government, state government, PSU or any agency of the central government and state government. So, if you are contributing to incubators or research and development projects in the field of science, technology, engineering and medicine, that is also covered. Then contribution to public funded universities, if there are universities which are public funded, Indian Institute of Technologies, IITs, national laboratories and autonomous bodies established under Department of Atomic Energy, Department of Biotechnology, Department of Science and Technology, Department of Pharmaceuticals, Ministry of Ayurveda, Yoga, Naturopathy, Unani, Siddha and Homeopathy, that is the Ministry of Ayush, Ministry of Electronics and Information Technology and other bodies like DRDO, ICAR, ICMR, Medical Research and Council of Scientific and Industrial Research engaged in conducting research in science, technology, engineering and medicine aimed at promoting sustainable development goals. So, I feel like I am reading the budget, okay. So, contributions to all these institutions, again no need to remember that, remember 2 or 3 of them if at all a question comes up in the examination. Contribution to these are also covered in CSR activities. Then, if there are any rural development projects or slum area development, that is also covered. And any disaster management including relief, rehabilitation and reconstruction activities. So, if there is some earthquake or something and there you are carrying out disaster management, that is also allowed, right. Now, this is schedule 7 activities covered, and if you remember when we talked about if the entity has not spent, if the company has not spent the amount which it is supposed to spend, then within 6 months from the end of the financial year, they have to contribute that amount to funds specified in schedule 7. From here, you have to pick up a fund and to that fund you have to contribute within 6 months from the end of the financial year. Let us now have a look at some activities which are not considered as CSR activities. A couple of them we have already touched upon, but still let us have a look at the entire list. This is as per the FAQs which has been given by the MCA. Okay. The CSR projects or programs or activities that benefit only the employees of the company and their families. So, if you are doing some project, some program, some activity which benefits only the employees and their families, that is not a part of your CSR activity. Then one-off events such as marathons, awards, charitable contribution, advertisement, sponsorship of TV programs, etc. So, if let us say there is a marathon, you are sponsoring the marathon, that is not considered to be a CSR activity. Or if you are doing only one-time charitable contribution, that is not covered under CSR activity. Then expenses incurred by companies for the fulfillment of any act, statute of regulation, labor laws, land acquisition act, etc. So, let us say under the labor laws, you have to provide some kind of benefit, let us say some insurance coverage or some medical treatment or some kind of hospital, then that is not covered under CSR activity. contribution of any amount to political party directly or indirectly, and activities undertaken by the business in pursuance of its normal course of business. So, during your normal course of business, if you are doing certain activities, then that is also not covered under CSR activity. For example, there is an earthquake at a place. As a part of your normal course of business, as a part of your ordinary course of business, you supply goods to that particular area. Now, that area is suffering due to earthquake. Because of that earthquake, you are giving 10% discount on your products, right? Now, here, because it is your routine operations, that cannot be called as a CSR activity. But on the other hand, if they had given food for free, if they had given some FMCG products for free, then that could be considered as a CSR activity. Let's now have a look at the accounting aspect related to CSR activities. See, when we say a company is carrying out CSR activities, it would spend some amount for giving free education, for giving free medical treatment or contribution to some fund. There is an amount which is being spent. There is an outflow of resources. How do we account for that? For this, the accounting principle is very clear. Whenever an entity is spending amounts for CSR activities, it will be transferred, it will be charged to the P&L. It will be recognized as an expense in the P&L. So, let's say I am contributing to a fund, you will debit that amount to P&L, you will expense it off in the P&L. Let us say there is some free education being provided, for that we are incurring expenditure, that also will be debited to P&L. Now, one question would come to your mind that, say for example, a company is creating a hospital for poor, hospital for poor. Now, for creating that hospital, you will spend some money. Now, whether the amount spent on that hospital, whether it should be recognized as an asset or whether it should be recognized as an expense. Now, for this, we have to refer to Ind AS 16. What does Ind AS 16 say? You can recognize an item as property, plant and equipment as an asset when you have control over that asset and when you expect future economic benefits from that particular asset. Now, let us say you have created a hospital. Now, that hospital will be used to treat patients in that particular area for free. Is there any future economic benefits? There are no future economic benefits. Do I control that asset? I may control that asset, I may not control that asset. So, if both the conditions are satisfied, control of that asset and future economic benefits, you can recognize it as an item of PPE. But let us say there are no future benefits expected. You have established that hospital will be used only for treating poor patients, and the control or the management of the hospital is also, let's say, given to the local authorities, okay, maybe the municipal corporation or the Gram Panchayat. If that is the case, then we can say that the entity does not have control and entity does not also have, entitlement to future economic benefits. Hence, you cannot recognize it as an asset. But if, let us say, the treatment is being provided to poor patients, but the building is owned and controlled by the entity and the entity can sell off that building whenever it wants to. The entity can sell off the hospital whenever it wants to. Then in that case, you can recognize it as an item of asset in the balance sheet, right? So, you have to look at the facts and circumstances of the case. You have to look at the relevant Ind AS provisions and then see whether you can recognize it as an asset. But otherwise, generally, CSR expenditures would be debited or would be recognized in the P&L only. Then, the next question that arises is whether we need to create a provision for the unspent amount. Whether we need to create a provision for the unspent amount. Say for example, in the current year, we were required to spend 10 lakhs. We have spent only 8 lakhs. For the balance 2 lakhs, are we required to create a provision and a liability for that? Of course, yes, because there is a present obligation to transfer that amount to the funds specified under Schedule 7 within a period of 6 months. So, there is an obligation, there is a present obligation and the entity will have to transfer that 2 lakhs to the specified funds. Hence, the entity will need to create a provision for unspent CSR activities amount, right? Then, if there is an ongoing project, even there is an obligation to transfer the funds to a specified account, which is unspent CSR activities account with a scheduled bank. So, even for that amount, you will have to create a liability. You will have to create a liability of transferring that amount to the specified bank account. So, say for example, there is an entity which is required to spend 10 lakhs. Okay. Now, there could be two scenarios. One could be an ongoing project. Other one could be other cases. Right. Amount spent is 8 lakhs. By the end of the financial year, amount spent is 8 lakhs. Now, if it is an ongoing project, you have to transfer 2 lakhs to a specified bank account, right? So, for that we need to create a liability on 31st of March and the entry will be CSR expenditure debit 2 lakhs to liability for CSR 2 lakhs. And when you contribute, you will debit the liability, debit 2 lakhs to bank 2 lakhs, right. Now you might be wondering, sir, the company itself has the bank account, the company has created the bank account, can we not show that in the balance sheet? We cannot show that in the balance sheet because we do not have right over that money. We have to spend that on the ongoing project. And if there is any amount which is unspent, what will you do? You will have to transfer that to the specified fund. So, we do not have right over that money. So, we cannot show that money as an asset. For recording purpose, for tracking purpose, you may maintain separate records. But for the purpose of accounting, you do not have claim over that particular money. Now, same case here also. Other cases, same entry you will pass. CSR expenditure to liability, liability debit to bank to transfer the amount to the specified funds. Now take another case, say for example you have to spend 10 lakhs, this is the obligation. Out of this 10 lakhs, 7 lakhs is spent, 3 lakhs is unspent. Okay. Now out of the 7 lakhs also, 5 lakhs is paid, 2 lakhs is unpaid. Means what? We are basically looking at the accrual accounting. 7 lakhs is the expenditure on accrual basis, 5 lakhs is paid, 2 lakhs is yet to be paid. Now this 2 lakhs will be paid to the respective vendor. The 2 lakhs will be paid to the respective vendor, and for this 2 lakhs you will have a separate liability. And for the purpose of CSR amount which is not yet spent, you will consider 3 lakhs and create a provision for that. So basically we will say 7 lakhs is already spent, 3 lakhs is not yet spent, and for these 3 lakhs you will create a separate liability. Out of the 7 lakhs, 5 lakhs is paid, 2 lakhs will be outstanding. That will also be shown in the balance sheet as a liability, right? That is one thing. Now, sometimes what happens is, let us say 10 lakhs is the obligation and amount spent is 12 lakhs. Amount spent is 12 lakhs. Now, what do we do with this extra? You have 2 lakhs. You have 2 lakhs. Now, this 2 lakhs extra can be set off in the future. You can set off in the future. For how many years? For 3 financial years you can set off. So, this extra spent of 2 lakhs can be recognized as an asset because you have spent that money and you can set off against the obligation of the next period. So, in year 1, the entry would be CSR expenditure 10 lakhs. Deferred CSR expenditure 2 lakhs to bank 12 lakhs. Now assume for a moment, year 2 obligation is 11 lakhs. So in year 2 what you will do is CSR expenditure 11 lakhs debit to bank. You will spend only 9 because you have 2 lakhs of carry forward brought forward. So 2 lakhs is there to deferred CSR 2 lakhs. So like this the account would be closed, right? Sometimes what may happen is I have brought forward excess CSR spend, but I am not covered under CSR provision in the current year. In that case, what is to be done? In that case, we have to see what is the likelihood of we being covered under CSR in the next 2 years, and accordingly you will continue to carry the asset for the next 2 years. If you feel that in the future also will not be covered under CSR, then you will have to write off that particular asset and debit it to the P&L. Now moving on, the next question that we need to answer is whether contribution in kind, distributing free goods or providing free services, whether that can be considered as a CSR spend, right? Now if you take a very strict interpretation of the act, it says that the board should ensure that every company spends. So when we say spend, it is spending in terms of money. Spending is in terms of money. So if you take a very strict interpretation, you have to interpret it as it has to be money that has to be spent. Now let us say the company spends money, produces goods and distributes that as CSR activity covered under those activities as per schedule 7. Can we consider that as CSR activity? Now if you take a strict interpretation, we may say that no, you have to actually spend money. You have to actually spend money, but here indirectly also we are spending money. So now what MCA has clarified is that even if the company is distributing goods, for example, let's say medicines, free medicines for the purposes of those activities covered under schedule 7, that can also be considered as CSR activities. You need to look at facts and circumstances of the case. But if you are giving some discount in your ordinary course of business, if it is your ordinary transaction, routine transaction, that you cannot cover it under CSR. Just because there is a flood, I am giving 10% discount, and that 10% discount I will say that it is my CSR activity, that is not permissible, right? So you have to look at the facts and circumstances of the case and see whether distribution in kind can be considered as CSR activities. Another interesting issue that we need to address is how do we handle surplus arising out of a CSR activity. Now you might be wondering, sir, we are spending money, how can we get surplus? So just hypothetically assume that we are conducting some kind of medical camp in a particular area. Okay, let's say it's a rural area and we are conducting a medical camp, some free health checkup, preventive health checkup and all of that. And we want to spend 10 lakhs for this medical camp. Okay. So a lot of people from that particular area would come up and they would avail the services and all of that. So this is the amount which is budgeted for the medical camp. Now side by side, what the company has also thought is, so many people are coming, why not get sponsors, why not get hoardings and advertisements or billboards put up in that particular area where other companies can promote their products. So on one side we are spending 10 lakhs on the medical camp, and we have also called other companies, we have communicated to other companies that see, we are conducting this camp because we are providing for free, or a lot of people would come. Why don't you set up your stalls there? Why don't you set up hoardings there? It will be a great advertisement opportunity. So with that, let us say we earned 12 lakhs by way of advertisement fees, or maybe some other, we put some food stalls, from that we earn some money. Hypothetically assume we earn 12 lakhs from this particular advertisement fees. Now what happened? Actually it has become 2 lakhs of surplus. We had to spend 10 lakhs, we spent that 10 lakhs, but we got 12 lakhs in return. Now this is a surplus arising out of a CSR activity, and the policy is very clear that the surplus of 2 lakhs should again be spent in CSR activity only. So this 10 lakh is not yet spent. We wanted to spend 10 lakhs, we came back with 12 lakhs. So this 2 lakhs plus this 10 lakhs, the entire amount of 12 lakhs should be spent as CSR activity in the future. That is the first thing. Okay. So this is called surplus arising out of CSR activity. Now how will we account for it? See, when you have received net of 2 lakhs, you will of course credit it to P&L, and you will have a net debit to bank 2 lakhs, because the net amount that you have come back with is 2 lakhs, and that is the amount in P&L, 2 lakhs, right? And immediately you will create a liability for this 2 lakhs, that is, you will debit P&L and credit liability for CSR, which is 2 lakhs and 2 lakhs. So on one side you will recognize as an income, immediately you will recognize it as an expense. So this 2 lakhs of surplus that is generated is rooted outside the P&L. It is no longer in the P&L, and you have created a liability for CSR, which is 2 lakhs apart from the 10 lakhs that we are supposed to spend. So the entity now has to spend 12 lakhs. If it cannot spend the 12 lakhs, this has to be transferred to the fund specified in schedule 7, right? Slightly complicated way, but just think of it that I spent 10 lakhs, but I earned 12 lakhs from the event. The entire 12 lakhs will now have to be spent back in CSR activities. You cannot distribute that as dividend, right? So there is one more thing in respect of surplus arising out of CSR activity. Now the next question that arises is whether CSR expenditure can be claimed as deduction under the Income Tax Act. Now for this we have to go back to PGBP provisions and understand whether such deductions are allowed or not. Now the principle or the rule is very clear. You will understand more about it when you learn income tax, but the principal rule is very clear, that is, if it is a CSR activity which is covered under section 30 to 36 of the Act. For example, the Income Tax Act provides that if you do some scientific research, you will get a deduction. Now, that kind of research may also be covered under CSR activity. So such deductions which are specifically mentioned in those sections, those will be allowed. But apart from that, remaining expenditure will not be allowed. Now what is the reason for that? The reason for that is you are not making that expenditure to earn income. When you are donating to poor, when you are providing something for free to the poor, when you are providing some hospital services, contributing to a fund, all these expenses are not incurred for earning income. So when you are not incurring the expenditure for the purpose of earning income, you cannot claim a deduction for that, right? So that is why it cannot be claimed as a deduction. The CSR expenditure is more like an application of income rather than an expense for being incurred for earning an income. But if it is something which is very specific, let's say section 35 AD covers some specific items, there you can claim deductions. Let's now quickly glance through the format in which the information related to CSR activities has to be disclosed in the annual report, right? So this is applicable for financial year commencing on or after first day of April 2020. Before that, there was another format. Now we'll follow this format, right? First thing is brief outline on CSR policy. What is the CSR policy, right? So basically, statement containing the approach and direction given by the board of company, recommendations of CSR committee, etc. Right, this is the thing. Then composition of the CSR committee, serial number, name of the director, number of meetings of committee held, number of meetings attended. So this format is also followed for board meetings. Then provide the web links where composition of CSR committee, CSR policy, CSR projects are disclosed on the website. Provide the executive summary along with the web links of impact assessment of CSR projects carried out in pursuant to sub rule 3 of rule 8 if applicable. So for specified projects, you have to carry out impact assessment. So that has to be disclosed. Then average net profit of the company as per subsection 5 of section 135, 2% of the average net profit, surplus arising out of CSR projects or program, amount required to be set off for the financial year, total CSR obligation for the financial year. So what is the 2% of net profit? How much is the surplus brought forward? How much has been set off? And balance amount, what is the obligation? So basically if you say 2% of the average net profit is 10 lakhs, surplus which has arisen out of CSR project in the previous period is 2 lakhs, that is 12 lakhs. Amount required to be set off, so let us say 3 lakhs can be set off. So 12 lakhs minus 3 lakhs, 9 lakhs is the total CSR obligation for the year. Then amount spent on CSR projects, both ongoing project and other than ongoing project. What is the amount spent in overheads, amount spent on impact assessment, total amount spent for the financial year. Then CSR amount spent or unspent for the financial year, basically total amount spent, total amount unspent. Out of that, how much has been transferred to unspent CSR account, then amount transferred to any fund specified in schedule 7. So what is the unspent portion for ongoing portion, ongoing project, how much is that, and what is the amount transferred to that specified account, and amount transferred to any fund specified under schedule 7. Excess amount for set off if any. So here also you will calculate whether there is any excess. So what is the 2% of average net profit, total amount spent, excess amount spent, then surplus arising out of CSR projects, amount available for set off. So basically let us say 2% of net profit is 10 lakhs, amount spent for the financial year is 13 lakhs. So excess amount spent is 3 lakhs, but then there is a surplus of 1 lakh from existing project. So 3 lakh minus 1 lakh, 2 lakhs can be carried forward. Then details of unspent CSR amount for the preceding 3 financial year in this given format. Then whether any capital assets have been created or acquired through CSR amount spent in the financial year. If yes, enter the number of capital assets acquired and furnish the details. So what is the particular of the property, pin code of the property, date of creation, amount of CSR spent, details of entity, authority, beneficiary of the registered owner. Who is the registered owner? So a lot of time what happens is, let's say you build a hospital, you have created a capital asset. That hospital may be transferred to the local panchayat or the rural development agencies or rural development authorities. So who is the registered owner? Who is the beneficial owner? That also needs to be disclosed. Then specify the reasons if the company has failed to spend 2% of the average net profit, that has to be disclosed, and so to be signed by CEO or the chairman of CSR committee, then to be signed by the specified personnel, right? This is the broader format of disclosure of CSR activities in the annual report. So let me take you through an annual report. I will not read it out in detail, but you will see the amount of disclosure that is needed. So this is annexure 2 given to the annual report on CSR activities pursuant to section 135. So brief outline of the company CSR policy. So what is the CSR policy that is given? What are the CSR projects that has been given? Then what is the composition of CSR committee that has been given? Web link where you can see the policy that has been given. Details of impact assessment, it says not applicable because it doesn't meet the criteria. Then you come down here, the details spend expenditure. Average net profit is negative. Total amount spent in the financial year 23.7 crores. CSR amount spent or unspent. So total amount spent is 23.7 crores. Then what is the CSR obligation? See, here is an interesting scenario where there is no CSR obligation. 2% is nil because it's loss. Then there is no previous surplus that is available. Then there is no set off that is needed. So the total CSR obligation is 0, but still they have spent 23.7 crores in the CSR activities. Then they have given details of what all activities they have carried out, the foundation, the names, the funds and all of that. You can have a look at it if it interests you. Then they have spent, what is the amount spent in administrative overheads, that is also given. Impact assessment not required, and excess amount set off if any. So total amount spent, excess amount spent for the financial year 2 minus 1. Then excess amount for set off. So here, though they have spent the amount of 23.7, they are not claiming any set off for the subsequent periods. That is marked as nil. And then other details as required by the Companies Act has been given. So right, so this is the disclosure given in annual report, and a lot of companies, as I told you, even though they do not have the obligation, they will spend amounts related to CSR or the corporate social responsibility. Now, apart from the report format that we have discussed, which is given in Annexure 2 of the CSR rules, there are some specific things we need to keep in mind. Number one is that the disclosure of CSR expenditure has to be made by way of a note to the P&L. So there has to be a specific note which details out what are the various expenditure which are incurred for the purpose of CSR. Okay, that is one thing. Then another thing what we can do is we can have a separate heading called CSR expenditure in the schedules to the P&L, right? So there also you can make the necessary disclosures. Then another important amendment which you have to keep in mind is that, let us say for example in year 1 the net profit exceeded 5 crores, because of which the CSR provisions were made applicable in year 2. Right. Earlier, the provisions were that if in year 2 it is applicable, then in year 3 and year 4 also it is applicable. So, year 1 the net profit was greater than 5 crores, because of which year 2 CSR became applicable. You have to spend in year 2, not only in year 2, you have to spend in year 3 and year 4 also. That was before the amendment. Now, after the amendment, the change is that if you have to check for year 2, you look at the net worth, you look at the turnover, you look at the net profit of year 1. If applicable, spend the amount and be done with it. When you move to year 3, say for example in the same situation, the net profit is only 3 crores and other net worth and turnover criteria is also not met. In year 2, the net profit is less than 3 crores and other criteria are also not met. So, in year 3, you don't have to comply with CSR provisions. Earlier, 1 year it becomes applicable, you have to make it applicable for that year and other 2 years. So, basically for 3 years it becomes applicable. But now, you have to look at year on year basis. For a given year, check the preceding financial year. If conditions are met, then only CSR provisions become applicable. So, with this, we come to the conclusion of the corporate social responsibility, more to do with the rules and regulations which you have already learned and some part of accounting treatment as well.